metal space, and what indicators do you look at to gauge sentiment?
Well, I tend to look at the very, very big picture. I mean, most of the people, if you like, in sort of the gold bug community, sort of worry about, the day's performance, or, what it's doing, between contract expiries on COMEX and all the rest of it. I mean, yeah, I do follow that. But the thing that really matters, I think, is a far bigger picture. And I think the way I'd encapsulate that is by saying that the world is splitting into two, which was the subject of one of the articles I think you might have been referring to, with Asia as a whole, dominated by Russia and China, both of whom have accumulated very substantial gold reserves, not declared as reserves necessarily, but nonetheless in government ownership. And so have virtually all those countries that are aligned with them. I mean, the members of the Eurasian Economic Union, for example, the BRICS have been doing that, and even these Eastern European countries, part of the EU, like Hungary and Poland, have been buying gold as well. So that is one side of it. The other side of it, of course, is the rest of us, NATO, if you like, America, UK, Europe, Australia, New Zealand, Canada. We've been doing absolutely nothing with gold at all. And so in a sense, I think that the future, if you like, if you want to look at the really big picture, you've got to look at the future of the Asian continent and their geopolitical strategy and its likely success compared with ours. So that, I think, is probably the one thing which I would really define as something tangible that we can argue about. And then, of course, there is also the background, and that is that we are very definitely on the beginnings of a bank credit contraction. Now, that is very, very serious, because if you look at GDP, you think GDP is the economic actions of everybody doing things which are included in the GDP. Well, in one sense, it is. But actually, the better way to look at it is the sum total of bank credit being deployed in the economy. So if you contract the amount of bank credit, then it doesn't matter what individuals are doing in the economy, basically GDP is going to go down. That's what we face. And the eventual consequences of that are bound to lead to more debasement of the fiat currencies and potentially their final destruction. And so in that context, you look at gold and silver, they are the only legal form of money. And this was stated by J.P. Morgan himself in front of Congress in 1912. He said, gold is money and all the rest is credit. Now, he wasn't offering a matter of opinion. He was actually stating a legal fact, which is still true today. Mm-hmm. So if the currencies become debauched, which we're on a course for this to happen, unless suddenly by some miracle we get politicians who will actually draw a line in the sand and say, no, we're not going to print any more money. We're going to control the quantity of money, and we're going to ensure that there is some form of convertibility to stabilize its purchasing power. If that happens, wonderful. But I think that's like a snowball in hell's chance.
Where the higher interest rates that have triggered this risk-off environment start to actually work in gold's favor here?
This is an interesting one, because if you're a Keynesian or a macroeconomist or a conventional investor in today's markets, you would argue that higher interest rates impose a penalty on ownership of gold because it yields nothing. So therefore, this is bad for gold. But actually, I mean, it's a pretty stupid analysis, for the simple reason that actually the comparison you should be making between bullion and fiat currency is actually between bullion and cash, folding notes. I know we don't see so many of them nowadays, but that is where the comparison is. Neither pay interest. The other thing to bear in mind is that the whole role of gold is actually as money, not as an investment. So this idea that you've got an investment penalty for holding gold is complete rubbish. It doesn't apply. And as proof of this, when we went into the 1970s, I think I'm right in saying that the Fed funds rate was around about 6.5%, something like that, and gold was $35 an ounce. At the end of 1970s, we saw gold go up to $850 an ounce and Fed funds rate up at 19. So, is higher interest rates bad for gold? You're looking at the wrong thing. Yeah. But having said that, I think that's what markets will do initially. I mean, if we have a banking crisis, we saw this also with the Lehman crisis. The first thing everybody did was they dashed for cash. They thought that was safety. And then they realized that actually the consequences of this are that the amount of debt is going to be, debt, credit, whatever, is the same thing. The amount of credit is going to be expanded, and that is going to dilute the purchasing power of the currency. And therefore, gold rose from, I think at the time, something like $680 to around about $1,900, $1,920. I would think on a banking crisis, which is probably no more than a month or two away. That sounds like a pretty extreme statement, but I think it could actually be that soon. The initial reaction could well be, I'm not saying that it will be, but it could well be for people to sell down gold, and particularly the people in the market who are short. They'll say, whoopee, we can recover our positions and sell it down. We all sort of think, oh dear, we ought to get out of gold and get into, US Treasury bills or something. Completely wrong. But that, I think, could well be the initial reaction. So I don't look at this, current level of gold and sort of think it's too cheap, too dear, whatever. No, that's investment talk. I'm just looking at it as money. I know that the current system is close to its eventual collapse. And under those circumstances, there is only one form of money that you should hold, and that is physical gold. Probably physical gold coin, where it is legal tender, and you can use it to buy what you want. I'm not talking about buying food and things like that, but if you want to buy assets on the cheap, like you might have salivated over that house sitting on the beach, which at the moment is priced at $3-4 million, you might get that for, I don't know, 5 ounces of gold. I mean, but it would probably be 5 gold eagles or whatever.
Mm-hmm.